Hey everybody, it is Tom Sheehan here of the Sheehan Real Estate Group of Compass here with your 2023 third quarter market report. And wow, it has been quite the quarter in the greater Boston real estate market. The big news that is really the biggest influencer on the greater Boston real estate market, you may have heard it in the news, and that is interest rates. And while I generally don't start my video talking about interest rates, it's going to be important to understand what is going on with interest rates, to understand the numbers that I'm going to be discussing here when it comes to the local real estate market. So over the last quarter, interest rates have been steadily going up. We were floating around in that low sixes to mid sixes, and now we are squarely well into the 7% range for a 30-year fixed rate mortgage. Throughout the second quarter of this year, we also had high interest rates that were steadily increasing, but they were more in the 6.25 to 6.5, bumping up to that 6.7 range, and hadn't really broken through consistently over the 7% range. But even in the second quarter, when interest rates were relatively high, they were pretty dramatically higher than they were in 2022. In the second quarter of 2022, interest rates were in the 4.7 to 5.8 range. So when we were comparing the second quarter of 2023 to the second quarter of 2022, we were talking about, while seasonally the same market, dramatically different when it came to interest rates, almost a 2% difference. So while the seasonal market conditions would be similar, we weren't really appreciating the impact that interest rates were having. You may remember in quarter two, when we were looking at the median sale price of homes in greater Boston, they were about the same. They were level in 2023 compared to 2022. Now that we're in the third quarter of 2023, we can now see somewhat similar market conditions, both from a seasonality and a higher interest rate environment. Well, interest rates in the third quarter of this year are still 1% higher than they were a year ago. The third quarter of last year represented a new market, a new environment of high interest rates that we hadn't experienced yet, and there were certainly some adjustments that were that we experienced in the third quarter of 2022. And what we're going to see now is that when we have adjusted for both seasonality and high interest rate environment, there's still a lot of upward pressure on pricing. So to that point, when we're looking at the median sale price of a single family home in greater Boston in the third quarter, it was 9% higher than last year. Currently, the median sale price for a single family home in greater Boston is $875,000, which, when you consider the current interest rates being well into the 7% range, the affordability of such a home is extremely low as it's been in the last 20 years. And as we've talked about in the past year, the higher interest rates are not only affecting affordability, but they're also affecting inventory. The number of new single-family homes listed for sale in greater Boston in this last quarter in 2023 compared to the third quarter of 2022 is down 21%. The number of sold homes that we saw this past quarter in 2023 compared to 2022 is down 26%. So while we had fewer listings, we had fewer sales, more so than the fewer listings. So while this number of listings dropped, the number of sales dropped more, which gets reflected in our next number of days on market. Days on market, on average, this past quarter compared to last year, up 16%. We have a similar story when it comes to greater Boston condos. The median sale price this past quarter of a condo in greater Boston was up 7.5% to $710,000. The number of new listings dropped 14% this past quarter compared to the year prior, and the number of sales dropped 15% this past quarter compared to the last year. So even though the drop of condo sales was mirrored by the percentage of the drop in listings, days on market was still up around 10% this past quarter compared to the third quarter of 2022. So what about when we talk from year to date? Are we jumping a tremendous amount? Last quarter, it was looking like we might have a flat year for median sale prices. Obviously, this past quarter has shoved up those numbers quite a bit. So year to date, taking quarter one to quarter three for 2023 and comparing the same time frame of last year, the median sale price of a single family home in Greater Boston is up 4%. So when we compare year to date of quarters 1 through 3 of 2023 compared to quarters 1 through 3 of 2022, both for single family and condos, the median sale price is up 4%. Now, the number of new single family listings over that time is down 24%, and the number of listings for condos over that same period of time is down 21%. So we're still seeing far fewer listings, meaning despite these incredibly high interest rates that we haven't experienced in a long time, which is resulting in dismal affordability, prices are still going up. In simplest terms, we are still dealing with a supply and demand, and the reality is supply is not matching the even depressed demand that we have after interest rates. So we know purchase affordability is going down with these higher interest rates and these higher prices. So naturally, where are people going to go? They're going to continue to rent, and they're not going to leave the rental market and become homeowners. They're going to stick in the rental market. And so getting back to that supply and demand, you can imagine what that's doing to rental prices. And while rental data is a little bit harder for me to track with my resources, doing a lot of reading and relying on the groups that have that information available, what I've been reading is that rental rates in Greater Boston year over year have been up around 10%. And when you're talking about Boston proper, you're looking at a 15% rate hike in rental prices year over year. And that's a big problem. Any way you slice it, people's housing costs are up dramatically from last year to this year. And housing prices are part of inflation. And so what you have is a Fed that's trying to tame inflation, but the interest rates are affecting that segment of the inflation measurement and keeping it from going down. The biggest problem is we just don't have enough inventory in this area. And when you don't have people moving and remaining in their homes, and you don't have that turnover, you have pressure on pricing that's going to go up. And when there's fewer homes for people to buy, they continue to rent. And again, the inventory can't keep up with the need, and you just have rising prices. But we can't forget some elements of those numbers that I just reported on. While prices are going up, the number of days on market is going up, and there seems to be an accumulation of some inventory. As you may recall, the drop in the percentage of sales is higher than the drop in the percentage of new listings. And this gets back to something I talked about in the earlier videos I did about the market in 2023. Buyers are a lot more discerning. If they're going to have this outrageous monthly payment because of these interest rates, they want a property that they can move into, be happy about, and feel comfortable. Buyers are a lot less willing to sacrifice elements of their want list if they're going to buy in this higher interest rate environment. So for sellers, properly pricing your property and presenting it in its best light possible is extremely important to have success in this current real estate environment. Another thing to consider is what percentage new construction represents of a lot of these home sales. I know in some of the markets that I'm working in, while there might be inventory on the market, a large percentage of it is new construction, which is at a price point that doesn't meet the needs of the vast majority of the buyer pool looking in that market. So looking at the year-to-date numbers, new construction listings represent twice as much as they normally do of the new listings we've seen. So normally, single-family new construction homes in Greater Boston represent around 3% of the inventory that we see annually. Year to date, new construction listings represent 6% of the new listings we've seen on the market. So twice as much as we would normally see. And just to give you some perspective on the price point of those new construction homes, the median sale price for a new construction home in Greater Boston is $1.7 million. So that is more than double the median sale price of a single family home when you're considering all the homes. We've also seen an uptick in the percentage of condos listed that are new construction. That's at around 12.5%, whereas normally we're looking at 9%. So where do we go from here? As you've heard me say a million times, it's anyone's best guess. The biggest takeaway I've had monitoring this stuff on a daily basis, over the last month, I've seen people get a lot more pessimistic about the future of interest rates than I had heard them being in the months prior to that earlier this year. Earlier this year, I heard a lot of mortgage experts saying that it was reasonable to expect that interest rates would start dropping as we got later in the year, probably ending up in the 6% range by the end of 2023 before getting into the 5% range in 2024. It's already October and we are well into the sevens. Getting down to the 6% range would represent a dramatic turn and drop in interest rates over the next couple months. So that seems completely out the window. Now estimates are saying that we're probably going to be in this 7% rate environment well into 2024, and we might not see a reduction in rates until the following year. So what's that going to mean for housing? Well, if this year has been any indication, we are going to see continued poor inventory levels, especially in existing homes. It is just not going to be economical for people who are in homes and that, while they would like to move, have a mortgage that is in the 3 to 4% range when buying that next home is going to mean they purchase in the 7% range. Most resale of existing homes is going to occur because of some serious life event. And we'll see a continued reduction in the number of people selling their homes to move up for the sake of just better home environment. So it doesn't seem unreasonable to expect some continued upward pressure on pricing, especially on a year-over-year basis. If there's any relief in sight, it's probably for renters, as a lot of the new construction that does occur in Greater Boston is rental properties. So hopefully with the introduction of that new inventory, there's some stabilization in rental rates. But again, a lot of the upward pressure on rental rates comes from people not entering the purchase market. And with these rates remaining so high and affordability so low, you might not have the same level of relief when so many people are continuing to rent. So that's all I got. It's a challenging market. Real estate will always keep you on your toes. There's always new elements to consider, and everyone's situation is different. So if you have any question about how the current real estate market impacts your next move, please give me a call, shoot me a text, send me an email. I'm happy to discuss your situation and what would be the best path forward given your circumstances. Thanks for watching and looking forward to talking to you next time. So we certainly have a challenging real estate market. Real estate always keeps you on your toes. You always have to be monitoring what's going on, and everyone's circumstances is different. So if you want to know how the current real estate market affects your next move, please don't hesitate to reach out. Give me a call, shoot me a text, send me an email. I'm happy to discuss your situation and chart a path to your next move. All right, thanks for watching. Until next time, be good.